Hey everyone, welcome in to another daily editorial here on the KE Report. We are chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, look, I know we've talked about this a number of times, but I think the most prevalent commentary on the metals markets right now deals with the continued divergence between the stocks and the metals. We've been talking off mic and even looking at a couple charts, and look, there's no denying that gold, silver, stocks, those are beat up, washed out, you could make the comment. But the actual metals, gold and silver, they're not, say, as oversold as the stocks. They're not as washed out as the stocks. I realize that there are still some pretty close support levels that gold and silver do need to hold. And if they don't hold, they could go through a further decline. But still, there continues to be this discrepancy between the stocks really continuing to fade, even though they have bounced, let's say, in the last couple trading days, and the underlying metals that hold up there. It's really like the metals are providing still some hope for all these investors that are investing, including myself, in the metal stocks. But the problem is the metal stocks aren't providing that kind of hope. What's your takeaway from this environment, Jordan?
Yeah, I mean, it's frustrating because if metals had already, well, I mean, silver, it appeared to break below 22. Now it's rallying again. It's an oversold bounce, but I don't think it would, given the way it's trading, it doesn't look like it was a false breakdown. So I think silver is much close. I mean, it could have one more break or one more period of selling and be really close to a low. But gold is still far away because gold hasn't even threatened 1675 again. It's still trading in the mid 1700s. And that is frustrating because if you were just to look at the miners by themselves and you look at those indices, yes, they're extremely oversold. I mean, some indicators are at the second or third most oversold points in the last 7 years. GDXJ, for example, that got really close to my target of 35, but not, I think it came down to 37. So not quite close enough. But, that's, miners are rallying a little bit now. They could rally a little bit more, but it's frustrating as looking at the two because, again, if you're looking at the miners just by themselves, you could say, yeah, these are bombed out. They're extremely oversold. There's not that much downside. But that doesn't preclude gold from breaking below 1675 at some point in the next couple months. So that's the frustrating thing is I don't see like an imminent answer to all this. I mean, it could still drag out for another 3 or 6 months.
Well, Jordan, when you're looking at the valuations on the GDX or the GDXJ, one point we had discussed yesterday with Dave Verflay is that the last time the GDX was around 30 was back in 2016 when it rallied and gold got up to 1375. So clearly the miners are indicating they believe, or the market is indicating they believe, that the gold price and the silver price still have further to drop, but it is that frustrating component where it's holding up better. The metals are better than people expect. So do you expect that the miners are leading the path down here for the metals, and that the miners are indicating that we are going to break through that 1675 and go into the low 1600s or high 1500s, and that silver is going to break through that 2150, 22 and head down to 19? Is that what they're telling us with these low valuations?
I would lean toward yes. But that's just a guess at this point. I think the frustrating thing is it doesn't have to be imminent for the market to be right. In other words, like we could have a period here where we rally for a little bit in the sector, and then people will think that things are okay now. We've seen the bottom, and that huge divergence between the metals and miners that's out the window now. I mean, that could be the thought if we have a decent reflex rally here. But I don't think we can rule that out. I mean, given the macro fundamental landscape, which we might get into, where we're looking at, do we get the rate hike catalyst or do we get the 15% correction in the S&P? Those are going to take, either of those scenarios is going to take a little bit of time to play out. And so that just worries me as far as the divergence between the metals and the miners. That just because we haven't seen the gold price break yet, that doesn't mean that it can't at some point. Whether it be 2 or 3 months from now, or even 6 months from now, if the market's waiting for that rate hike.
So, Jordan, you've been around this sector for quite a while here. Have you ever seen a divergence like we are seeing now? And in all fairness, a divergence that it feels like we've been talking about for years between the stocks underperforming the metal?
Corey, I think we would have to go back 2007, 2008. I mean, 2008, that sharp correction or crash, it really didn't last that long. I mean, I remember, so gold bottomed at the end of October that year. It peaked in March. But after the peak in March, well, even leading up to that peak, the stocks are really underperforming gold, that is. And even after the peak, the stocks were really underperforming gold. But it took a while before we saw gold like really fall below 800, I think, or the high 700s. So it reminds me of that a little bit. But I'd also have to go back to the 2013, 2014 period. I mean, I'd have to take a better look at that. But I think the stocks were just nosediving relative to gold. And yeah, unfortunately, what we've seen in recent months, it kind of reminds me of that period. I mean, there's much bigger differences. So we're not. I mean, this isn't 2013 in the sense that we're going to see like another 2 or 3 year sell off. There's big differences, but on a smaller micro level, given the underperformance, it does remind me of both 2013 and 2008.
Well, Jordan, you had walked through earlier in this discussion that the two outcomes that we think would be beneficial for precious metals would be the Fed starting a rate hike cycle or the markets rolling over. Do you take any solace from the fact that over the last week or so, as the markets, the general markets, have been under pressure, gold and actually even the miners held up better than one would expect? A lot of people thought if there was a selling event in the markets that it would cascade over into the precious metal sector, but they actually diverged a little bit. Could that be an early sign that we're seeing that divergence between a market under pressure and the precious metals getting a slight bid?
It could be. I mean, if you go back to, so looking at, I think the last 6 years or so, the three best bottoms or buying opportunities in the sector, one of those was in 2018, and they actually diverged where the stocks actually bottomed and started to move up as the stock market corrected. So people just, they have it in their minds that it only happens one way. I mean, they only think of the COVID crash or 2008, but there's plenty of other examples where the stock market corrects or rolls over and precious metals actually diverge. And so, yeah, I think as far as what's happened, I mean, it looks like the market peaked about a month ago or a little over a month ago. And, we have seen better relative strength from our sector compared to the stock market. It's a good sign so far, but the question is this correction going to continue, and will it be significant enough to materialize in a real up leg in precious metals and not just an oversold bounce? So that's my worry. I mean, looking at the S&P 500, I mean, it's down like, I don't know what, 5 or 6% it's corrected so far. So that's really nothing. It really has a long way to go as far as that correction to where it can really give us a sustainable rebound and something significant. But I mean, so far over the last couple of weeks, yes, we've seen a good sign there, but to me, it's too soon to proclaim that as, this is a real significant indicator, for the next 6 to 12 months.
Now, there's a lot of people talking about, look, a correction will bring more people into the precious metals, might actually wash out the precious metals at the same time, but at least precious metals and those stocks could bounce back first. What kind of a correction would we need, Jordan, for the markets? Is it a quick washout? Is it a grinding correction where the market just slowly moves down? In your eyes, does it even matter? And what should the precious metals bugs be looking for?
That's a really good question. Maybe the slow grind down to a 15 or 20% type of correction. I mean, that type of correction, which would last, obviously require several quarters, at least a couple of quarters to play out, I think that's something that could really benefit precious metals. I mean, something that's like quick and sharp, and then then the stock market were to bounce right back. I don't see that as significant, especially because I don't think it's going to result in a change in Fed policy. Like if you look at what happened if you go back to the last three significant bottoms, so the end of 2015, that was actually the start of the rate hikes. You look at 2018, that was a shift in Fed policy where the market bottomed actually a few months before the shift in Fed policy. And then you have the COVID crash where there was huge amount of fiscal stimulus that was coming because of that. So if the correction is too sharp and it's not long enough and the market just bounces back with no change in Fed policy, that's not going to help precious metals. But if it's something that it takes a while to play out and the correction does, if the stock market does correct more than 10%, and it does have in some way, perhaps it shifts Fed policy or economic policy, or people really start to get worried about the economy, that's the scenario that would be bullish for precious metals.
All right, Jordan, we're going to wrap it up here. Not much more to cover in these markets, but it sounds like, again, and still, it's the U.S. equity markets that we need to keep an eye on and see if this recent weakness will turn into anything more, and if that finally does drive some more investors back into the precious metals. We'll chat again next week, Jordan, hopefully on the back of some more movement, some more positive movement, but hey, we'll see. These markets for the metals investors have been relatively slow, especially in terms of stocks. Jordan, thanks as always for your time, buddy. Hope you have a great rest of your week.